What is up, guys? It is Flash back with some more charts and another video. Got a little bit of a different one for you guys today. Not totally different, but this is would go in line with my macro puzzle pieces type of video to figure out, okay, where are we today? Where do we want to be positioning for the next 5 or 10 years from an investment perspective? Again, some bigger picture stuff because there's more clarity on the higher time frames. And so here is a chart, again, Patrick Karim of North Star Bad Charts, at Bad Charts 1 on X. He says, this very rare event only happened 3 previous times in 140 years. Bookmark this chart as it's one of the most important macro cycle charts out there. SPX, S&P 500, priced in gold. And at the bottom is a 7-year rate of change, giving a very clear indication that a precious metals bull era can embark. So again, let's just walk through this. 3 times in the last 140 years has the S&P 500 broken down, measured in gold. And so you see, there's 3 different topping structures. A 4th one is shaping into formation right now, and you see those red lines, the trend lines with the breakdowns. And whenever that trend line does break down, whenever the S&P 500 breaks below that red trend line, or a couple of those red trend lines, that's when gold, silver, commodity type of assets really take off. And that's really the rotation that I'm looking for, is rotation from general equities, big tech, et cetera, NASDAQ, and it rotates into commodity driven assets. So gold, silver, uranium, oil. And so that's what's looking like it's going to take shape here. Again, this is a big ship we're trying to turn that I think is going to be playing out for the remainder of the decade. A lot of this is kind of pointing to 2030 and maybe beyond that. So interesting to think about where we're going to be in terms of geopolitics, the state of the dollar, a gold standard, Bitcoin, et cetera. But just really a good chart to again, as Patrick said, bookmark. Really, I could stare at this chart for hours, honestly. And then, there's going to be a rotation in the future where we're going to probably want to rotate out of gold and silver and back into general equities, S&P 500, tech stocks, et cetera. But that time is not now, I don't think. And so I have another chart here which I want to show you, similar, more shorter term stuff, but it's, again, gold measured in the S&P 500. So this one is the S&P 500 measured in gold. This one is kind of the inverse because gold is now being measured. It's the numerator. SPX is the denominator. And so you see, when gold is outperforming S&P 500, that's money is rotating into uranium stocks, oil stocks, gold and silver miners. We want to be breaking out of the black lines, for example. And then when gold is falling behind the S&P 500, it's breaking down, measured in those red trend lines. And so the black lines are tailwinds, the red trend line is headwinds. And so right now we're at that turning point where I think a lot of these charts are kind of pointing to we're going to break out of this black trend line and continue that march upwards. And I'll just kind of jump into that ratio here. Where do we got? Right here, right? So this is that same chart. This one. And so I threw a bowl on it and I'm kind of just tracking it. We're kind of trying to break out of a horizontal. I think we'll continue to maybe chop sideways a little bit, gather our energy before we can make a run up to 0.643 or thereabouts. But see how this goes? This bull kind of goes into the 2030 is right here. So this is going to require a lot of time, I think. So just another chart that I kind of want to bookmark, keep my eye on. And then last but not least, another chart. This is from Patrick Karim as well, but this last one is the NASDAQ adjusted for inflation. And then he's overlaid Bitcoin on top of it. And so essentially what he's saying is there's a huge correlation between Bitcoin and the NASDAQ adjusted for inflation. And so when we think about it, we haven't seen Bitcoin in a true stock market bear market. or when gold has outperformed the S&P 500, for example. We haven't seen that yet. And so look what the Nasdaq did, from 2000 to 2009, huge bubble top bear market, took several years for it to recover and go to new highs. And so just imagine if Bitcoin was around then, it more than likely would have done the exact same thing. Bear market, a lot of time to recover because it's so correlated to the Nasdaq. And so that's where I'm like, yeah, this Bitcoin narrative is great, sound money, digital currency, store of value, store of energy. But when you look at a chart like this, I really think gold is the asset to be in. So that's a different video for you guys. Again, kind of puzzle pieces-ish. But again, it's all about gold compared to the S&P 500. I think that's a key chart that we want to bookmark and keep our eyes on. Hopefully this is helpful, guys. Drop a like if it was, and I'll see you in the next one. See ya.